Hello, in this video we are going to see lending processes and major lending types. So lending, when we go for a lending, there is a process which is followed before the loan is approved and loan is disbursed. So there are three major steps: origination, disbursement, and servicing. Origination is where the customer comes or is marketed for a loan, and he she applies for a loan application, and some approvals are given for the loan. Disbursement is payment of the loan. It's like the dollar value which is being paid, disbursed. Servicing is the servicing of loan, like viewing the statements, seeing all the transactions, administration and maintenance of the loan. So those kind of things are servicing. So we'll get into the details now. So origination, like I said, the application, pre-qualification of the loan. So before we make a judgment on the loan, there is a pre-qualify process which can assess whether we have to go further in the steps or we can't give the loan because the person applying for the loan does not have enough, does not meet the eligibility criteria. Then we have loan processing, underwriting. Underwriting is important. Underwriting is a process which evaluates borrowers' credit worthiness, income, and property value. So from underwriting process, we would be able to know whether the the borrower is should be approved or should not be approved. Then we have a loan approval process. There are some disclosures which have to be disclosed to the borrower, and then we may have a appraisal and property inspection for which the loan has been taken. Disbursement is disbursing, basically giving the amount or the money, that is the disbursement. So we'll be doing the closing of the loan, which means all the legal process, signing of loan documents and other required paperwork. And post that, lender disburses the loan funds to the appropriate parties, such as seller of the property and other service providers. This is basically the money transaction which is happening. And servicing is payment collection, customer service, which we give, escrow account management, loan modifications, account updates, loan payoff. So all these things is basically once the loan has been disbursed, what exactly the user would be doing, the borrower would be doing. Those things is the loan servicing part of it. So this finishes the lending processes. Now we come to the core of the three different kinds of lending which we wanted to see. So retail. So first we go to the literal meaning of these words. Retail. You go to a store, you purchase something, the store is called as a retail store. So sale of goods to a small in small quantities for use or consumption. So basically for one person's consumption, if we go and purchase something, that's called a retail. Wholesale is like if you purchase something in bulk, it is called a wholesale. The selling of goods in large quantities to be retailed by others. So you take wholesale, probably shop owner would go and purchase something from a wholesale in a discounted price, and then they will be selling it to the individuals. So here comes the individuals who will be purchasing in the retail, and here comes the businesses. Okay, so here comes the businesses who will be purchasing wholesale, and then they will be giving in retail. Correspondence. So you must have heard the word called correspondence. So for example, some studies are done on correspondence, which means they are done on mails. So you correspondent to the party and do education. So what is the meaning of correspondent? A person who writes letters to a person, especially on regular basis, is called correspondent. So basically it is the interaction between two parties is correspondence, which is the meaning of correspondence, interaction between two parties. We will come to know why exactly. I'm going to the literal definition of these in a bit. Broker. Broker is a intermediary. So intermediary between parties. And what it will do, it will sort out, so let's say this party has something to sell, goods to sell, and this party wants to buy whatever is being sold. Now let's say this party cannot directly connect with this one because it's a small one and there are multiple small parties which are there. So who can do the transaction, who can support the transaction. If a broker is in between, broker shall be responsible for managing the transactions. So that is basically an intermediary which is coming in place and which is facilitating the transactions. So that is the meaning of broker. Now we go to the lending types, how these different definitions are related to the lending types which we are having. So retail lenders, they originate loans directly to the borrower. So you can relate it now because you have already seen what is the meaning of retail. In wholesale, what will happen? Wholesale, there is a concept of mortgage brokers which will come in picture. So mortgage brokers are intermediary who work with wholesale lenders to find borrowers. So the broker would be listing out different lenders who are possible, and the borrower would be taking one of the loans which is apt for him or her and taking it from the borrower's site or borrower's website or borrower's whatever platform the borrower is having. From there, sorry, not borrower, broker is having. From there, from the mortgage broker's platform, the borrower would interact with the mortgage broker. So if this is the borrower, it would interact with the mortgage broker, and mortgage broker, from where it gets detail, it gets from the wholesale. So it will be, so to go to the definition, mortgage brokers gather information from borrowers, help them choose suitable loan products, and then submit the loan application to the wholesale lenders for underwriting and funding. So broker is just an intermediary. Again, who is providing the loan? Who is doing the lending? Wholesale lender is doing the lending. Wholesale lenders provide brokers with a range of loan options and terms. Okay, so the user or the borrower has lot of options, and they would be able to choose one of them which is applicable to them. So now the concept comes that if a borrower goes to the retailer or to a wholesale, which would be cheaper for him? So essentially, they both would be same for him. But if he goes to the retail, he would be going to one retail at one time, one bank at one time. But wholesale, if he goes to a site, he would be able to see multiple options, and thereby he or she can choose what is most relevant, most cheapest for him. And wholesale rates to the mortgage brokers would be little bit discounted, and that's where mortgage brokers would make their margin. So essentially, for a user, it may not make a lot of difference between whether he takes from retail or whether he takes from wholesale. The only difference which will come is that in wholesale, he she would be able to see lot of options, and he she would be able to pick whatever is most apt for himself or herself. So that's where this difference between retail and wholesale. Now, correspondent, when we discuss correspondence literal definition, we discuss that correspondence means uh, interactions, correct? So here what happens is correspondent lenders are often mortgage companies, okay, or financial institutions. They will do everything, okay. They will do loan origination, disbursement, sometimes servicing also. The only differentiator which is here in case of correspondent is it's mandatory. What they will do is they will sell off their loans. So what they do is uh, they sell them to a larger lender and investor in a secondary mortgage market. In essence, correspondent lenders originate loans using their own funds or credit lines, and then they typically sell. So this is the thing. Sell the loan to larger lender or aggregator such as a bank of or mortgage company. So they are interacting with the correspondent is basically interacting with both borrower, and then they are selling it. They are not holding the loan with themselves. They are selling it to the larger lender or aggregator. And some of these will go to something called mortgage based securities, wherein it is sold in the secondary market also. I have explained MBS in some other video, but MBS is where they may also land up these loan instruments when the correspondent sells in the secondary market. So that's what is all about these three kinds of lending. Now let's see the different functions which are possible. So customer engagement, yes, in retail it will happen. Correspondent also happen, and mortgage broker would there would be a site. Customer would be engaging via the site. Here the customer would be visiting the bank. So application, yes, they will be applying here in wholesale because wholesale is sold via mortgage broker. So these and this are very much tied together. So this is not going to do any application loan processing. Okay, but loan terms, because essentially money is coming from whom? It is coming from wholesale lender itself. So loan terms applicable, undertake price risk applicable, underwrite loans, loan closing and funding, all these things would be done by the wholesale lender. Now, if you see here, this must be a because it's a retail lender, everything is applicable. It is clear. Wholesale lender, yes, the thing where the customers engage, that is missing. That is not applicable because it takes help of a mortgage broker. Now let's see the correspondent lender. Everything is applicable. All the things in this loan is happening here except undertake price risks. Why? Because like we discussed earlier, the correspondent lender is going to sell off these loans which he the correspondent lender has procured. So those loans are going to be sold off. So that's where they would sell these loans to a larger lender or a aggregator. So that's where they are not taking a long-term price risk, and that is what is a cross here. So those are the different kind of lending types. Hope this was useful. Thank you very much.